Bitcoin K? Big rally is here! The Bitcoin bull run is just getting started, and my target? It's right here. This isn't like the last cycle. What we are seeing right now could be the start of something much bigger. In this video, I will show you exactly why I believe this rally isn't just a short-term bounce, but the start of something much bigger. Hey everyone, welcome back to the channel. Bitcoin has officially broken back above 90k the first time since March. I'm not saying we are just bouncing, we are going long. Naturally, everyone is wondering the same thing. How far can this go? A lot of people are calling this move a temporary bounce. I completely disagree. Why? Because the signals we are seeing in the market right now, they are telling a totally different story. Gold has been rallying all year, and now Bitcoin is starting to catch up fast. On top of that, the IMF is warning about rising US inflation, global growth is slowing down, and we are seeing clear shifts in on-chain data. All the macro conditions are lining up, and they are all pointing in one direction. So, here's the real question. Could it be different this time? Let's find out. Because the Bitcoin 250k train is leaving the station. Why this rally might just be getting started, and why 200k Bitcoin might not be a dream after all. The markets seem to have recovered since yesterday's fallouts. The Dow, the Nasdaq, and S&P 500 all showed gains of around 2.5%. Big Tech is bouncing back, driven by optimism around US-China negotiations. US Treasury Secretary Scott Bessent spoke at a JP Morgan event, saying the current status quo with China is unsustainable. After that, President Trump told reporters in the Oval Office that tariffs on China will be substantially reduced. Other White House officials also hinted that progress is being made behind the scenes. Also, President Trump has said that he does not intend to fire Fed Chairman Jerome Powell, just a day after calling him, quote, a total loser, and that his termination couldn't come fast enough, end quote. Typical Trump, if you want my 2 cents. These statements probably brought some relief to the markets, but given the changeable nature of political messaging, we need to stay cautious. I know that might sound redundant, but I can't overemphasize the importance of gold. Bitcoin's breakout is happening at the same time gold is hitting new all-time highs, and that's not a coincidence. Gold is up over 30% this year. It's rallying off global uncertainty, trade wars, political instability, inflation fears. Sounds familiar? Bitcoin is starting to trade like gold as a safe haven asset, not just a risk asset. Bloomberg even said it straight. Bitcoin is acting more like digital gold. So, now that Bitcoin is back above 90k, people are asking, will it catch up to gold? Renowned expert Tom Lee says yes, he sees that Bitcoin making up the gap, especially now that deleveraging is done and the Fed is being cornered. This breakout isn't just retail hype, it's being driven by big money. Institutions are buying. BlackRock's IBIT ETF just ranked 4th in total volume, with $1.9 billion traded in just 2 hours. $381 million flowed into spot ETFs in one day, the highest since January. And I mentioned MicroStrategy, now called Strategy, adding 6,556 more Bitcoin to its stacks yesterday. Big enough to be mentioned today as well. And it's not just capital, it's positioning. Funding rates are negative, which means short sellers are paying long holders to stay in their positions. This shows that there are currently more traders betting against Bitcoin. If the price starts to rise while funding rates are negatives, there is a higher chance of a short squeeze, as short sellers may be forced to buy back their positions. Let's take a look at the liquidation heatmap. Bitcoin spent most of the day ranging between 87k and 89.5k. We can see liquidation zones, the thick yellow and green bands, stacked underneath the current price, particularly between 86.5k and 88.8k. This was the calm before the breakouts, a base where smart money was clearly building positions. As we move toward the middle of the chart, Bitcoin starts to climb steadily. the price pushes up through some green-yellow bands, clearing out pockets of short liquidations along the way. Each time price pushes through a cluster, it gets a little boost as shorts are forced to cover. The real action happens just after 7 AM UTC on April 23rd. Bitcoin surges sharply from just below 90k to above 93k in minutes. This spike lines up with a thick yellow-greenish band, meaning a huge cluster of short liquidations was triggered. This is a classic short squeeze. As the price started to rise, traders who were betting against Bitcoin, the short sellers, were forced to buy back their positions to cut their losses. This rush to cover shorts created a feedback loop of buying, which pushed the price even higher. On top of that, fresh buying from both institutionals and retail investors added to the momentum, making the surge even more dramatic. After the breakouts, Bitcoin settles into a new range above 93k. The heatmap shows fewer bright bands above, suggesting there aren't as many liquidation clusters left in the immediate area. The price action becomes a bit choppier, but the bulls are clearly in control for now. And that's how the levels shape up. For the support zones, primary, around 92k, circled in orange. Secondary, 88.5k, 89.5k, the original base where this move started. For the resistance zones, an immediate light resistance around 93k, 94k, circled in orange, and a heavier liquidity target around 95, 96k. That's the next likely battleground. Let's go to the order book and whale activity. Take a look at the top panel. We can see the selling wall has become thick around 93k, and it has temporarily broken through upwards. And the buying wall is getting thicker and it continues to increase in height, so we can see the buying force is showing a strong will. If we look at the movement of whales, look at the overall movements. The largest brown, the second largest purple, and the smallest orange are more focused on buying. But during the same period, the red and green are throwing away a certain amount of volume and showing a movement to re-enter. So, in terms of the overall order volume, the buying force is more weighted. Let's zoom out. The IMF just downgraded global growth. The US is staring down inflation again, and the dollar index is falling. Bitcoin is starting to decouple from equities like the Standard & Poor's 500 and Nasdaq. It's been climbing even as stocks pull back, reinforcing its role as a macro hedge. This kind of price action is helping Bitcoin stand out as a truly independent asset class. Yeah, as I said, at the same time, gold is flying, stocks are struggling, and Bitcoin decoupling. That's what is so interesting here. Bitcoin doesn't have earnings, it is not tied to rate hikes or quarterly reports. That makes it different. And in a market starved for growth and clarity, different is good. People are tired of macro uncertainty, and for many, Bitcoin is becoming a hedge against it, not just politically, but financially. We are seeing that in ETF flows, in institutional positioning, and even in global demand, with Japan, the US, and hedge funds loading up. So, the big question is, where does Bitcoin go next? Let's take a quick look at sentiment. The crypto fear and greed index just jumped to 72, the highest we have seen in weeks. That's a big deal. Just last week we were sitting in fear at 29. Yesterday, neutral. And now, greed is back. This tells us the market is starting to wake up fast. And that aligns perfectly with what we are seeing on chain and on the charts. Breakouts, liquidations, inflows. Of course, rising greed also means we need to stay alert for volatility, but in bull markets, greed tends to persist and fuel the next leg up. The takeaway? Momentum is back, and the crowd is finally starting to believe again. From a technical standpoint, we have broken above the 88-89k resistance zone. The next key resistance sits between 93k, 94k, and after that, 95, 96k, then possibly 250k. And this lines up perfectly with the global M2 correlation model, which has predicted Bitcoin's trajectory with 80% accuracy over the past few years. If that model continues to play out, Bitcoin could be heading well past 120k by early quarter third. But we need to stay realistic. There is still resistance ahead, and as always, volatility is part of the game. But between the short squeeze setup, the institutional momentum, the safe haven narrative, and the macro tailwinds, the case for a continued breakout is strong. So, are we really heading for 250k? Right now, the signals are lining up. This isn't about hype or narrative, it's about structures. Not noise, no headlines, but intent. This rally isn't built on memes or speculation, it is backed by accumulation, institutional positioning, and clear shifts in the macro landscape. And remember, moves like this don't wait for confirmation. By the time it's safe to believe it, the market is already moved on. Don't get stuck in hesitation, stay focused on the trend. If this video gave you some insight, please make sure to like, subscribe, and stick around, we are just getting started. Drop your thoughts in the comments. Is this the real breakout, or is it one last trap still waiting? Thanks for watching, and as always, stay sharp, stay informed, and I will see you in the next one. Bye bye.